CMHC, after proving wrong twice last year when they predicted 18% price drop in the first report and then 50% price drop in the second report, this time they came up with a completely different direction and now they're predicting price rise up to 14% in the next 3 years. What is up YouTube? What is up Canada? Thanks for joining in. As you know, the purpose of this channel is to educate my audience about the Canadian real estate market with particular focus in the GTA and Toronto area, as well as I cover some of the macroeconomic factors that impact the real estate market. So today we're going to touch upon three things. One is CMSC predicted forecast, how relevant it is, April sales number, as well as jobless figures. You know, they came out last week, so we're going to touch upon that as well. So let's dive into it. So CMHC, they published another forecast report last week. And according to that report, now they're predicting 14% price rise, but 3 years out. Now, publishing a forecast report which is 3 years out, it's really, far from reality, because as you know that the Canadian real estate market is very dynamic. It moves so fast that you can only predict up to 3 to 4 months, let alone 3 years, because that's too much far out. You cannot predict that because there's so many things that is happening on the ground where an economist cannot put this into the model. Here's the objection with this report, right? I'm not objecting the price rise. That is going to happen for sure. But the problem is the things that they're considering to predict their trend is housing statistics, population growth, and GDP. These are the three major things that they consider based upon their modeling. And they use this mathematical model to predict where the market is going. But if you have been watching my videos lately, you know that the fundamental reason for this crazy market is the unlimited credit growth. When you have almost zero interest rate and you have a huge credit growth on the balance sheet from these commercial banks, which means they're driving the buyer sentiment and encouraging them, incentivizing them that go and acquire more assets. Because when you go to the bank and ask for mortgage lending, the moment the bank create and issue a new loan, they're basically creating a new credit. They're basically creating a new money into the system. The more money that you create in the system, it drives the inflation, because what they're doing is they're pumping a lot of money, the new money into the system. It creates more cash, more liquidity in the pool. When you have more cash and liquidity, ultimately it is going to drive the inflation and the value of the currency diminishes. Okay, that's a fundamental rule in terms of how demand and supply works. So that's the fundamental reason, and they're not considering that, right? As long as we keep pumping money into the system, issuing new loans at a very almost 0% interest rate, this craziness will continue, right? That's the main reason where I don't think this report is worth considering, because it's just purely based upon some mathematical models. They are missing out the ground reality, what's happening, and they're missing the monetary policy, the credit growth, the credit creation issue that is fueling this market. You need to understand why this is happening, because if I'm the investor or I have some sort of a cash available, the only option I had was GICs and saving accounts and buying bonds. But how much percentage of return they are offering right now? 0.5% or maybe 1%, hardly. With the current inflation, which is 2.6%, is it really worth? I'm losing money, right? That's a guaranteed loss. So what I'm going to do, I'm going to go and acquire some sort of asset that will hold its value in the long run. And real estate is one of them. Whether you buy, any other asset like precious metal, gold, silver, platinum, or you put money into the stock market, or you basically purchase cryptocurrencies, whatever, anything that will hold its value, people are looking towards that. And real estate has been proven in the history in Canadian market that it not only holds its value, it appreciates significantly. Now, we can argue whether this is good or not, but this is the reality right now. Okay, that's the reason why people are looking for buying more properties, because if you look around, mainly the buyers are not first-time home buyers. They are investors. They already possess one property and they're acquiring 1, 2, 3, 4, 5, 6 other, condos and real estate assets just to park their investment, just to park their cash so that they can keep their cash some sort of valuable going forward. Okay. The other thing I want to cover is the April sales number, so published by TRREB last week, and according to that, this is the first time since pandemic we see the average house price decline 3%, 3.6% as compared to last month. Although it's not significant, but it is showing you a change of trend, compared to last few months. And the reason why it's happening is because we have a little bit of more inventory. But the price of single detached houses like townhouses, detached houses have already gone up significantly. There could be it can go up to a limit where people think, oh, this is too expensive for me to buy. If these properties are going out of an average investor affordability, then people will stop buying them, right? Then they will look for alternative options, which is condos. So if you look at the condo statistics, the condo sales have gone 80% up from last year. Even though the average condo price has not gone up, but that is showing you that the interest is shifting from single family expensive properties to alternate cheaper assets like condos. So you will see in the coming months, people will be flocking towards condo market and buying those assets as well. Especially when the borders are open, the new immigrants come in, they will be driving the condo market significantly higher. The other thing I want to cover is the job loss numbers. We saw that the news came out last week, 200,000 job losses in Canada in the last quarter, which is very negative news, not good for economy. And this goes back to my previous comment in my video last week, where I think the Bank of Canada have to increase the interest rate, because if the inflation is going up and it's keep going up, the only way to control is to rise interest rate. Before they raise the interest rate, they have to make sure the economy has some sort of foundation so that it can keep the economy up. Because with these job losses, I don't think the economic indicators are strong enough to increase the interest rate. If the economy starts recovering as soon as the lockdown is over, the job losses, the unemployment rate goes down, then maybe the economic recovery will be seen, and then we will see the interest rate will go up at some point in 2022. That's it for me this week. I would like to hear from your thoughts in terms of what do you think, what's happening in the market. Do you have any questions or comments, any feedback you want to give? Please put them down below. I'll be very happy to listen to your feedback and then answer your questions, because I would like you to tell me what other topics I would be covering in my future videos. And if you have any real estate needs, buying, selling, rental, or investment, pre-construction, whatever, let me know. I will be more than happy to help you. Until the next week, thank you very much. I'll see you later.